Okay. Okay, great. Thank you. Um, so yes, my name is Marlene Datillo, and I'm here with my teammate Christian Nicodem, and we handle as the investment advisors your 401k plan, which, as you can see if you're looking up on the screen, is with the Capital Group American Funds. And at this point, you are now eligible to begin enrollment. And as a part of that enrollment, you can enroll electronically to the plan. You will be added to the plan's eligibility, and this should turn out an email to you for you to go ahead and start to get enrolled. And it will look something like this. Welcome to our new participant website. And you are probably going to be logging in as a new user. So you want to start down here where it says new user, get started here. It won't probably take me all the way through because it's going to want a social security number, a date of birth. So the things that you should have in front of you when you're going to log on are important dates like this, social security, date of birth. We also would like you to have your beneficiary elections available too, along with social security numbers for those beneficiary elections. Your plan has both a pre-tax and a Roth component to it. When you go to enroll in the plan, you're going to be able to choose one or the other, and you can participate at a pretty significant level. Starting next year, you can go up to as much as $24,500 of contribution. You can do it in the form of a percentage, and you can split that percentage between a pre-tax and a Roth contribution. So let's say somebody wants to participate at 5% contribution level. When you get to the contribution screens, it will ask you, do you want to do pre-tax or Roth? And then it will ask you what percentages you would like to do in either one. And you could, if you wanted to start out at 5, you could say, hey, I'm going to do 3% Roth, and then I'm going to do 2% pre-tax. You can change that anytime that you like as well. I would ask you that you would want to keep an eye on your payroll just to make sure that you see the right amount being contributed for you. It's not a bad idea to kind of monitor your paycheck on this just to make sure that everything is correct. One of the important features that Christian and I handle for participants is the investment. And let me go back to contributions for a minute. So when we talk about contributions, we're talking about the amount that you, the participant, are going to put into this with your own dollars. You do receive a matching contribution, which is one of the perks of this plan, from Med-Scribe, and you are in what we refer to as a safe harbor 401k plan. So that means that if you participate to a certain level, you'll receive a match for a certain level from Med-Scribe. And right now, the way the formula works is you'll get dollar for dollar up to the first 3% you contribute, and then 50 cents on the next two, then 50 cents on every dollar on the next two percentages that you contribute. So for easy math, this means that if you put in 5%, Med-Scribe will match at 4%. And that's what we refer to as the maximum. In other words, you're participating at the maximum where you receive the most amount of match that you can receive from the employer. And so we generally like to see participants start out at that level. We don't want to encourage people to leave any money on the table. It has been a bit since you've been able to participate in this, so we would like to see you participate at the max if you can. Now, you can always go higher. It's just that you cannot go over that maximum limit by the end of the year. And remember, you can change your contributions as well. You can stop, start, increase, or decrease your contributions, generally on a monthly basis. The other thing that I would like to go over is if you have this will be one of the areas that you'll see when you start to enroll. This is a great page because there's a lot of resources here for you. What are 401k plans? How do I participate? What's a Roth 401k? What's the difference? Beneficiaries? What is asset allocation? I also like the idea of mutual fund basics. What you're investing in when you invest in this 401k is a mutual fund. And a lot of times people will throw the terminology around, but they don't necessarily know what it means. So there is some great information and learning here for you. We do accept rollovers from other plans, and if you do have a rollover, there's information on how to do that, but we would encourage you to either call myself or call Christian. And we want to make sure that you realize too that we can do some individual meetings. If you're not really sure how much or at what level you want to participate, it's really worth it to email either one of us and set up a 15 or 20-minute call. We can actually help walk you through the portal if you want to share your screen and make sure that you get enrolled properly. Probably the best thing that we want you to be aware of is what are your investment options. Now, what you'll see currently is there are a series of target date funds. And these target date funds are related to a year. And you'll notice that they're 5 years apart. A target date fund is something that is chosen for you if you don't choose an investment option when you enroll. You will automatically be defaulted to one of these target dates, and you'll be defaulted to the one that is closest in years to your age 65. So let's just say that that turns out to be, the target date 50/50. And then this tells you a little bit about the target date 50/50. It is so much in growth funds, so much in growth and income funds, so much in equity income, and then so much in bonds. So the younger you are, the further out is the target. And the older you are, the closer you are to today's date. And that simply means that what they're going to do is they're going to automatically rebalance your investments. As you get older, every 5 years, they'll buy more bonds and less stock. And the idea is that if you are younger and you're in something like a 2070 target date, you should see that you are probably mostly in stocks. Oh, that one's brand new. Sorry, we'll go to this one. So target date 65, you'll notice that it's mostly growth and income, and equity income funds. There's only 6% in bonds. If I now take a look at the 2030 fund, and I go down here, you'll notice that now I have 35% in bonds. So again, the older you are, the more you'll have in bonds. The younger you are, the more you'll have in stocks. You don't necessarily have to choose a target date fund, however. We have a series of growth funds for you. There are growth and income funds. There are equity income funds. And what I'm doing is I'm starting at the top with the most aggressive funds. And we're working our way down to the least aggressive funds, balanced funds, and then into bond funds. And then there's also a government U.S. money market. If you're not entirely sure where you want to invest and you just want to stay in a cash-like bucket, the U.S. government securities fund is a great place for you to sit. Sometimes we have people that will go in and out of different funds. They're not sure how they want to invest, so they'll stay in this cash fund until they figure that out. Again, you would have to pick that. If you pick nothing, it's going to automatically put you into the target date fund. And again, I would encourage you, if you think you would like our help, Christian and I could walk through some of these funds for you. and give you the idea of where it might be most suitable for you to be invested based upon your experience in the market, your age, how much risk you think you want to take in an investment, and then how long you have until retirement. So those are a couple of variables we're going to ask you about. Currently, we just signed an agreement with Med-Scribe where we are now going to be expanding these investment options. We're going to go from, you'll notice that all of these have an R2 after them. That is the share class that we are in. But the plan is doing so well that we have been able to reduce the fees and move the assets to an R6 plan, and also add some different money managers. So now we have some Fidelity funds, we have some PIMCO funds. So when you get enrolled, if you pick one of these, and then we go to change to the new funds, which will probably be in the next 30 days, you'll find that it will automatically map to the new fund for you. So good things happening in the plan. We're making some really strategic changes that are going to be less expensive and give you better, more advanced investment options for your plan. Questions from any of you on this? No?
I do have one. What did you say was the maximum contribution again?
Okay, let me look for this year because we just got our notices for 2026. So it's going to go up a little bit. So in 2026, the maximum per year is going to be 24,500. But if you are over 50, you can actually do a catch up on top of that. And you can go as high next year if you're over age 50, $32,500.
Okay, thank you. And then I had another question, or just if you could repeat it again. The
Sure.
You said the percentages were a little confusing to me. You said up to the first 3%, that Med-Scribe matches up to the first 3%, and then they'll do like the 50 cents for every dollar
Correct.
on the next 2%. So then isn't that five? Would that be the 5%?
Right. So if you contribute 5, they will match 4. So it's dollar for dollar on the first 3% of your contributions. And then it's 50 cents on your contribution at 4%. And it's another 50% on your contribution at 5%.
Okay, I see. Thank you.
Yep. Any other questions?
Well, thank you so much.
Oh, sure. Yep.
Thank
Great.
you.
Everybody have a great holiday.
Thank
You
you so
too.
much. Happy
Okay.
Bye.
holidays.
Bye-bye.
Bye.
Bye.